Hi, everyone. Welcome to our home buyer event. My name is Terri Diaz, and this is,
Carlos Diaz.
and we're so happy to have you here, especially if you are new to learning about what it takes to purchase your first home. So we're here to help you with that. We have been in the business for quite a long time. Customer service, we've been in the business well over 30 years. But you've been doing this real estate for how long, Carlos?
10 years.
And I have been doing it for 3 years. And we started Collective Group Realty 2 years ago, and we're really happy to share our knowledge with you.
So one of the main objectives of this webinar is help renters and first-time home buyers transition to home ownership. What does that mean? Basically, instead of keep paying rent when you right before your lease is up, you need to have all the tools already in place to become a homeowner. You can start as early as 3, 4, even 6 months before your lease ends. That way, when the time comes, you don't have to renew your lease when your landlord is pressing you to renew your lease, or they're going to raise your rent.
So why would you tell someone who's renting, like, because a lot of the objections are the interest rates are really high right now. So what would you tell that renter to help educate them on why it would be better to purchase a home instead of renting a home?
Say $1,500 in a rental, or $1,800 or $2,000. That money goes directly into the landlord. That money will never come back to you. But when you own a house, let's say your interest rate is 7%, even 8%, that money that you put into paying your mortgage every month,
The 92% or the 93%.
3%, that is creating your wealth, because eventually you will own the house and you will not be paying not only that, but every year your rent increases. And you see sometimes it's 200, 300, 400. I've even seen it $400 or $500 extra a month. Now, when you have a mortgage, it's your steady payment all the time. Yeah, if the tax goes up or your insurance, you might see a little change, but it's not a huge change like when you're renting.
And then what I know is that with home ownership, when you purchase a home, the percentage of the value goes up about 12% a year, approximately.
That's another good point.
So,
Because when you own, like you said, your equity goes up. So let's say you bought a house for $300,000, a 3-bedroom, 2-bath for $300,000. In a couple of years, 2, 3, 4, 5 years, that 300 becomes 320, 330, 340, 350. Now, when you're renting, there's nothing going in your bank account at all. It's coming out of your bank account.
so true. So here are some benefits of renting versus owning, which I think we did cover quite a bit of these, but here are some of the benefits of home ownership. It's your house. You can paint it the way you want. You can, decorate it the way you want. You can change rooms around the way you want. Like if you want to take out a wall or, any type of home improvement, you're allowed to do that because it's your own home. And then Carlos did cover the cost comparison between renting versus owning. And then we didn't talk about this. So you want to talk a little bit about, especially recently, we have been able to get people into homes with less money than if they were trying to rent, like to purchase a home compared to rental.
Correct. So when you're gonna move into a new rental, after they run your credit, you do your application and everything, what's the first thing they ask you? They ask you for first month, they ask you for a security deposit equal to the amount of the monthly rent. And most places also, they ask for a last month rent. So let's say your rent is $2,000 a month, $2,000 security deposit, and last month is another $2,000. That's $6,000 to move in. In the last 10 sales that we have in the last 3 months, we have people that have been able to move in with only $2,000. One person just pay inspection and appraisal, and that's it. It's not every case, but it depends your situation. It also depends where the credit is, the debt to income, and all that.
And I believe that's what we're going to be talking about a little bit later, different down payment assistant programs and what we do to try to help alleviate you from all the costs of what it would cost, like the big down payment to be able to purchase a home. So, budgeting and financing, how to assess your financial situation. Everyone's financial situation is different. So we usually will refer you to our partner, the mortgage partner.
You're talking about the best mortgage lender.
Well,
That's who you're talking about.
yes, I am.
So we're talking right now about Jessica Romanisins with Waterstone Mortgage. Basically, the only way you will know what you qualify for is going through a pre-approval for a mortgage. It doesn't matter if you go to your accountant, to your neighbor, to your dad, your mom, your brother. No, they cannot tell you how much you can afford. The only way is running a full credit, because that's what's going to compare what your assets are versus your debt, your salary or your income. That's basically how you know.
So, we'll start talking about a little bit about down payment assistance, because that is also part of, with, you know, working with Jessica, our preferred mortgage lender, that she'll explain more of what it means, but there are different programs out there. And if you are a Florida resident, there is a thing called, a program called Hometown Heroes, correct?
That is correct.
Yeah, and that one, there are, like, just like here, you have to have specific credit scores. It needs to be your primary home, but with Hometown Heroes, you also have to be someone who lives in Florida and works within Florida to be able to get that down payment assistance. And then all of them have income guidelines, and the other one is the no home ownership for the last 3 years.
So let's talk a little bit about the first one. The first part of that is credit score. Credit score must be a 640. And that is
and above.
And above, correct. So if you have Experian, Equifax, and TransUnion, when they run your credit, the lowest one out of the all three has to be 640. If two people are buying together, the lowest credit score has to be 640 in order to qualify for the down payment assistance program. Second of all, like you said before, it has to be for the primary home. The government is not going to give you any money for you to make money as an investment. They give you money for you to live, but not as an investment. Income guidelines on the down payment assistance program, they need to know who's going to be living in the house. That doesn't mean they're going to be on the title or this or that. They want to know who's going to be living, because they calculate the money that they're going to give you based on the amount of people that are going to be living in the house and their income combined. And another requirement is that you cannot have owned a home in the last 3 years. If you own a house in the last 3 years, you're not going to qualify, because you don't need down payment assistance because you already had another house.
Now, a lot of people have been asking me, like, okay, so what exactly is down payment assistance? And I know that you wanted to discuss the 30-year silent mortgage, like what that means.
Basically, you buy a house with a regular mortgage, right? But then the down payment assistance to cover your down payment and sometimes part of your closing costs is a mortgage that doesn't have any interest or anything. You don't pay throughout the loan, you pay it at the end of the loan after the 30 years. Unless you decide to sell your house, then you got to pay that back. Or if you refinance to make money or to do repairs or something like that. If you refinance just to lower your payment, but you're not getting any money for anything, there might be an exception there where you don't have to pay the down payment assistance back. But this is a silent mortgage. Basically, it's silent for 30 years. At the end of the 30 years, that's when you then have to pay that. But by then, let's say you bought a house for $300,000. In 30 years, that's going to be at least 5, 6, 7, maybe 800,000. At that time.
Yeah, depending on the market.
So basically, you're getting free money to buy a house.
Now, how much money do you need for down payment or closing costs? Because a lot of people ask me that as well.
The average is anywhere between 3.5% to 5% of the price of the house. For example, if the house is 300,000, and the reason I keep saying 300,000, because that's the average right now That's where they start the average for the 3-bedroom, 2-bath right now at 300,000. And so 3.5% of 300,000 is 10,500. So that right there is the minimum average. And then the down payment is covering most of it.
Oh, well, look at that. Who were we talking about earlier?
Our preferred mortgage broker and the best in all Central Florida, Jessica Romanisins with Waterstone Mortgage.
And she really has helped us with quite a few clients that did not think that they were going to be able to purchase a home. So it's definitely important if you are thinking about purchasing a home to contact us. And then we can kind of guide you, you know, in more detail, one-on-one steps 1, 2, 3, 4. But the main thing when you get pre-approved is then you know what your finances are. You know what you financially can afford. And that is what Jessica can help you with. And then she also can help with what kind of programs out there with the down payment assistance.
Another thing that is very important, not all lenders are qualified with the Hometown Heroes program. You have to be vetted, you have to be qualified for that, and Jessica is one of them. Another important thing about Jessica, she works Saturdays, she works Sundays, she works on your time, not like the most of lenders that only work Monday through Friday, and Friday at 12 o'clock, they're already planning to get out. Jessica is there for you all the way.
And that's why we like her, because we work that way as well. We're always 24/7. You can contact us. So navigating the home buying process, like I said, we can do one-on-ones, you know, to help you, you know, with your own personal situation. But this is why it's so important to know, like, educate yourself a little bit beforehand, because with the new rules.
There is a new process right now where when you're going to purchase a house, before any agent can show you a house, they need to sign an agreement, and it's called the buyer's agent agreement. So when you're buying a house, your agent is supposed to provide you a contract that is between you, the buyer, and the realtor. And that has to specify what is the compensation, for how long is that contract for, what kind of houses is included, any specifications about different things throughout the process. You know, if it's going to be a contract for 3 months, for 6 months, for a year, you know, so it is very important that you get someone that is qualified as an ABR realtor. So
Yeah, and then what's happening, if you haven't heard, is that now the buyer is actually having to pay for their own compensation. It used to be just the seller would cover those costs, but now it is so it's 2 separate costs. The seller has their costs, the buyer has their costs. And with that buyer's compensation, if it is a buyer's market, there will be negotiating, like we'll be able to negotiate.
and you need someone on your side to negotiate strong on your behalf and with the best interest in you. So
And that would be us.
compensation is negotiable, and with the seller when they're trying to get concessions from the seller, because when you purchase in a house, it's not only about the down payment. It is also, you have other expenses like closing costs, and those closing costs. There is a lot of things involved in the process that is separate money from the down payment. The down payment really goes against the loan. So, for example, if you borrow $100,000 and you have to put down 5%, so $5,000 is the down payment. The other 95 is what the bank will give you, you know, to loan you that money. Now, separate about that, you got closing costs that it fluctuates between 2 and 4% of the price of the house also.
Well, can you explain what the concessions really means when you're a buyer? Like what does that entail?
Okay, so let's say you buy the house, $300,000. Let's say between all the closing costs, it's about 3%. So that's $9,000 that you got to come out of your pocket. And that's not counting the compensation that you have to pay your agent when you sign that agreement. So that $9,000 has to come from your pocket. But what about if you don't have it? How are you going to pay for it?
That means you may not buy a house, or
You got to rent again. So that's where we come into place. We are very strong advocates of getting money for you for concessions. Those concessions, we normally ask for the max. On an FHA loan, the maximum is 6% versus a conventional loan that is 3%. You can go a little bit higher if you put a bigger down payment, but this is the whole process. We're trying to get you money out of pocket.
Less money out of
less money out of
less
your
money out
pocket.
of pocket.
So when we try to get concession, we go all the way from the top, because once you ask right here, you cannot go here and ask for more. Normally you go on the top and then you negotiate, but we try to stay strong all the way on the top. So the last few people that bought with us, some of them got $16,000 in concessions, some of them got 17, some of them got 12. That's on top of their down payment assistance. So you can get anywhere between $10,000 to $30,000 of free money to become a homeowner and stop paying rent.
And that is our goal. That's what we try to do. So like I said before, and I've said it, I think 3 times now, if you want to learn more or talk more in detail, we are happy to do one-on-one so that you can, we can go over the process even in more details, because buying a house can be a little complicated, a little confusing, especially when it's your first time. But our goal is to get you into your home and you start building wealth.
So if you want to, like Terry said, one-on-one, we can meet at our office at 4700 Millennium Boulevard in Orlando, 32839. You can also call us at 321-244-3000, or you can email us at carlos@collectivegrouprealty.com, or you can visit our website and get some information before you contact us. And there you can fill out a form where it explains to you, like what you're looking for, so we can set up the first meeting. And that is collectivegrouprealty.com.
Now, thank you for watching, and we look forward to serving you.
Thank you.